Welcome to the market day of the Climate Bonds Conference 21. My name is Patrick Mispagel, Head of Sustainable Finance at Moody's ESG Solutions Group. We're delighted to have the opportunity to partner with CBI yet again on this important discussion about the pressing needs to mobilize capital for climate action. As a CBI partner since 2017 and a Climate Bonds Standard approved verifier, Moody supports advancing the growth and development of a global market to deliver climate solutions. There is little doubt that ESG investing will be the dominant theme facing financial markets and the financial industry over the coming years. The climate crisis and significant sustainable development needs will demand substantial investment. As the devastating impacts of climate change become increasingly visible, the recently released UN IPCC report is an urgent call to accelerate efforts to reduce greenhouse gas emissions and invest in adaptation and resilience. On the sustainable development stage, investment in the UN SDGs will require $5 to $7 trillion annually to shape real-world outcomes across wide-ranging environmental and social goals. The pandemic has also brought social financing more closely into the fore, and while pandemic relief efforts will wane, many of the key areas of focus, socioeconomic empowerment, employment regeneration, access to essential services such as healthcare and more, will persist. Clearly, sustainable investing and the role of the financial sector will continue to grow and support a renewed sense of collective purpose and ambition in tackling some of the most significant sustainable development challenges in the world today. The capital markets have begun to rise to the challenge in recent years as the spotlight on sustainable financing brightens and activity diversifies across regions, sectors, and instrument and project types. Reflecting this, Moody's forecasts that sustainable bonds may approach $1 trillion in issuance in 2021, with our forecasts calling for $450 billion in green bonds, $200 billion each of social bonds and sustainability bonds, and $100 billion of sustainability-linked bonds. And this is a number that we've increased over the course of the year as we've seen the exuberance of the market in the first half. By way of comparison, 5 years ago, there was less than $100 billion in annual sustainable bond issuance, and the preceding record-breaking year really reflects the remarkable growth we've seen in the markets. Sustainable bond issuance remains heavily dominated in Europe, but volumes are growing throughout the world as the market matures and issuers across all sectors aim to link their sustainability strategy with their capital market strategy. This too includes state actors, with sovereign sustainable bonds booming as countries pursue climate goals and address social inequalities in post-pandemic spending, enhancing market liquidity and thereby encouraging prospective issuers to enter the market. In emerging markets, importantly, where sustainable development needs are greatest and ESG risks are highest, we also expect to see volumes continue to grow over time. There are also opportunities for a more diverse group of sectors and issuers seeking to burnish their credentials through sustainability-linked bonds, which are quickly emerging as a popular alternative to the use of proceeds structure and benefit from providing an option for companies in early stages of transition. The sustainability-linked bond alternative will be one to watch as the market evolves. Moody's May 2021 Sustainable Finance Report finds that only 24% of climate-related SPTs directly referenced science-based measurement criteria. This is a great example of the market need for external reviews to demonstrate value and establish credibility, and underscores the importance of coherent standards. Moody's ESG Solutions Sustainable Finance Solutions, which include SPOs, second-party opinions, green certifications, and sustainability ratings, help enhance market transparency and integrity, which are essential to the continued development of global sustainable finance markets. Moody's ESG Solutions second-party opinions assess how proceeds of bonds and loans contribute and align to sustainability principles. To date, we have provided about 350 SPOs to sustainable finance transactions by sovereigns, companies, and financial institutions across 30 countries. Our SPOs not only assess alignment with market best practices, for example, ICMA Green Bond Principles and contribution to the UN SDGs, but also assess issuers' overall overall ESG profile and the coherence between the issuance and the issuer. Our solutions incentivize organizations to improve their sustainability performance and access new investment opportunities. As increasing market focus turns to ESG and sustainable finance, global standards will continue to evolve as well. Comparability across regions and the credibility of issuer targets, especially with respect to sustainability-linked bonds, will be key areas to watch in the coming years as the market continues to grow. Regulatory initiatives will also continue to gain steam as the market demands clear standards. The proliferation of taxonomies and disclosure frameworks has driven the conversation to standardization and harmonization, with the need for convergence high on the list of priorities to support sustainable market development. Supporting market transformation, Moody's sustainable finance solutions and insights help decision makers identify opportunities and manage risk. We believe that greater transparency, more informed decisions, and fair access to information drive better business and shared progress. Moody's is committed to supporting the move by investors and capital markets to address climate risk and to shift capital in a way that will reduce the forward risk of catastrophic climate change. And with that, thank you again for the opportunity to join you today. Thank you to CBI, and we wish you a successful conference. Thank you.